In this example video, we are going to go over review exercise 5.1 and 5.2, looking at the difference between a multi-step income statement and a single-step income statement. So in review exercise 5.1, they give us some information about our corporation, and they're asking us to put together a multi-step income statement. With the multi-step income statement, we're breaking apart our cost of goods sold as a separate item as an expense, and then we're talking about our operating expenses grouped together. And then our other items will be things that don't relate to the normal operations of our business. So things like interest revenue or interest expense would be considered other items for us. We could also consider for other items gains and losses on the sale of investments or fixed assets. All of those things would be considered other items. So we get started here, and we of course start off with our sales revenue. And they tell us that our sales revenue for this period is $500,000. On a multi-step income statement, right below that, we have our cost of goods sold. And they told us our cost of goods sold for this time period is $240,000. So this is going to give us our first subtotal on our multi-step income statement, which is our gross profit. Basically, how much could we have made in profit if the only thing that we had to do to run and operate our business was to sell our product and to buy it. So we have a gross profit of $260,000. They then give us one line item for operating expenses. And these operating expenses would be things like your selling expenses, your administrative expenses, everything that happens outside of just simply purchasing your product. So marketing, delivery, paying your corporate employees, all of those things would be considered your operating expenses, those expenses for running and operating your business. This gives us another subtotal item here, which is our operating income. Basically, how much are we earning in income for running and operating our business on a day-to-day basis? So here we have $210,000 in operating income. We also have some other items, and we have two specific other items that are mentioned here. So they tell us that we had interest revenue of $2,000 and interest expense of $12,000. So when we're thinking about interest revenue, that would be for something, for example, like a notes receivable. If we've given a customer an extended period of time to pay us back, instead of having them do an accounts receivable, we have them do a notes receivable. So they might now have 90 or 120 days to pay us back for the merchandise we sold to them, but now they have to pay us interest on top of that. So we're not in the business of giving out loans, we're not a bank, however, we have earned it, but it's not part of the normal operations of our business. Similarly, with interest expense, we might have to pay expenses on a loan. Again, that's not the normal operating expenses we have. In no way is it helping us generate revenue for our organization. So we're breaking those out individually. So we have our interest revenue. And they told us our interest revenue is at $2,000. And we have our interest expense, and it was at $12,000. So we net those together to figure out how much of an impact are these other items going to have on our business. And in this case, it's going to take away $10,000 from our operating income. These two items, interest revenue and interest expense, might not be there every single year because there's something other. They're kind of unique things that have happened. Again, other things that would fall in here is if we sold an investment for a gain or a loss, if we sold a piece of equipment or a building or machinery for a gain or loss. Things that are not necessarily always going to be happening in our business because they don't relate to the normal operations. So when we net that out with our operating income, we have a pre-tax income of $200,000. And then they told us our income tax rate was 30%, so our income tax expense would come next. So they told us that it's 30%, so it's going to be 30% of our pre-tax item. We're going to multiply that by 30%. So we're going to take $60,000 for our income tax expense. And finally, that arrives us back to our net income for our business at $140,000. Multi-step income statements really provide a lot of detail of what's going on in the business, again, by breaking out things like other items, breaking out income tax expense, looking at the difference between operating income versus pre-tax income versus net income. So that's doing a multi-step income statement. So now in review exercise 5.2, we're going to do this process all over again. However, we're going to do it in a single step income statement. So that's when we simply just group together all of our revenues, then all of our expenses, and subtract the two. So very similar to what you probably started off with in Accounting 101 when you were learning about financial statements. You were doing it for a service business. You lumped all of your revenues together minus all of your expenses and got your net income. That's what we're talking about with a single step income statement. So we have our revenues. And we have two in this case. We have our sales revenue, which is our normal one. And our sales revenue, they told us, is going to be at $500,000. And we have interest revenue. We're no longer separating it away from our normal revenues that we have of $2,000. So that gives us our total revenues of $502,000. We then have our expenses. We're going to look at all of our expenses. So cost of goods sold, we have at $240,000. We also have our operating expenses of $50,000. We have our interest expense of $12,000. And we have our income tax expense, and we already know this from doing our previous one, but if not, we'd have to do that separate calculation in order to figure out what that 30% would be being taxed on. But again, we already figured that out in the previous example, so we know that we have $60,000 in income tax expense. So we'd sum those together to get our total expenses for this period. And in total, we're going to have, I'm going to apply that negative sign there so it subtracts it away. Of $362,000. And then we net that with our total revenues to get our net income, which again is exactly the same under both of our formats of income statements, multi-step or single step. But it's just a different way of looking at the information. And again, multi-step income statements are going to be more widely used in industry because they're providing that reader a lot more detail.